if you are one who has a student loan, first of all, get a good understanding on the kind of student loan that you have or student loans that you have. You may have federal student loans. You may have private student loans. Those two segments are handled very, very differently on a number of different levels, not the least of which is that these programs, which have been postulated for forgiveness, at least to this point, only apply to federal student loans. I'm going to say that again. Even the ones that have been struck down, even in their original format, they have only applied to this point to federal student loans. So you want to make sure, do you have federal, do you have private student loans, because it may or may not apply to you at all. And then even among those of you who have federal student loans, again, this program that was announced here a couple of weeks ago, the Department of Justice came out and basically said, you can't do that. And so I don't say that to give it kind of a downer as a way to start here on this week's version of Dollars and Cents, but I want you to be aware of it, want you to be mindful of it. Make sure you take a look at the Department of Education website, the DOE website, to see if any of this may apply to you. Everybody's situation is unique, very, very important to take a look at it. All right, let's keep going here on What's Hot. And I feel like we're starting out with a couple of negative segments here. I promise I'm going to talk about food here in a couple of minutes. That always makes me smile. Hopefully it makes you smile here as well. But I got to talk about this as well. I saw another white paper come across my desk here in the last several days with regards to what we call super talls or high-rise office buildings in our urban centers, and seeing some, let's call it discouraging kinds of information with regards to vacancies in our high-rise towers. That's true in Charlotte, North Carolina, but it's also true in a number of cities, our urban centers around the country. We just exceeded a 40-year high in terms of overall vacancy, just over 20%, 20%, 40-year high in terms of vacancy rates in our urban centers, high-rise office buildings. This isn't true for all commercial spaces at all. Looking specifically at these particular Class A office spaces, and then part of this white paper, and the reason why I came across my desk, some pretty discouraging news from my folks in Pittsburgh, Pennsylvania there, and hello to all of those folks who are listening here. Appreciate you very much. But looking at one of the big towers there, the BNY Mellon building, the Bank of New York Mellon building, 1.6 million square feet. It's a monster. It's if it's not the tallest building in Pittsburgh, it's very nearly the tallest that's there. Unfortunately, BNY Mellon is going to be very likely here over the next couple of years pulling out of that building altogether. And so it may be very nearly to completely vacant by that time. And that was made public. I guess it's good that it was made public early, but that came out a little earlier than I anticipated. We know that there are some struggles with these large office towers in terms of their tenants who are maybe downsizing, in some cases allowing folks to work remote altogether. So we have those kinds of factors that are in play around the country right now. So that's not unique to the BNY Tower in Pittsburgh or to Charlotte, but literally in all of our urban centers around the country, a real struggle. And it's going to be very interesting to see what not only the ramifications of it are, but what is that going to mean for what it means to go to work? I mean, I have conversations literally every day with folks who talk about their professional spaces and whether it's going into an office, whether it's fully remote, whether it's some hybrid differential between the two of those, and what that means. And especially if they're looking for other jobs or other professions or other opportunities. And one of the primary factors is, do they have to go into an office? How far is the travel? How many days if they do have to go into an office? And some are more traditional, and they have that 5-day requirement, which we have become very accustomed to through the years. But others are more hybrid kinds of spaces. So what's that going to mean for commercial real estate overall? And again, I'm looking at single points in an algorithm here, and now I'm extrapolating. That's not very legitimate because there are plenty of places where the office space is very, very tightly held at this point, meaning that there's very little vacancy at this time. So it's not true that this is true across the board, but it is a trend that we're starting to see. And so we're watching it very closely here at North Main, wondering what that's going to mean as far as the value of that real estate is concerned. You heard about me mentioning just a couple of ancillary factors. One of the big ones is, and this is especially true there in Pittsburgh, but it's also true in a number of our urban centers, those tenants leaving impact the amount of property tax and school tax that they pay, because one of the valuation methods on these big towers is actually done based upon your tenancy in terms of duration and how much you receive as income in these big tall towers as a landlord. So it's going to be very interesting to see because that impacts obviously school taxes, property taxes in a negative kind of way. And we're not just talking about 1,000 or 2,000 square feet. We're literally talking about hundreds of thousands to even millions of square feet. So we're talking about big impact points. We're talking about real impact points as far as taxes are concerned. We're going to continue to watch it on our end of things. All right, well, we're going to take a break here as we hear from our sponsors. You're listening to Dollars and Cents presented by North Main Financial here on WSIC.
More of Dollars and Cents with certified financial planner Joshua Dobi is coming up on 105.9 100.7 WSIC.
Yesterday, our hottest day of the year.
Good work.
In the Lake Norman area, thankfully, we'll cool it off a little bit today.
Stream is up and running. You got about 2.5 minutes.
Time of the year. Mix of clouds and sun will warm it to the upper 80s, near 90 this afternoon. And an isolated shower or pop-up thunderstorm isn't totally out of the question, but wouldn't hold my breath for that. Mainly dry, still upper 80s, near 90 tomorrow for our Friday. The heat and humidity soar back for the weekend with a few evening pop-up showers and thunderstorms Saturday and Sunday. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
The WSIC app is available now wherever you get your apps, featuring local deals from great local businesses like Teresa Vance, life insurance agent and retirement strategist.
Here is your WSIC community calendar. Langtree Live gets your weekend off to an early start on Thursday night. The Carolinas' premier Beatles tribute band Tangerine Trees covers many well-known songs and a few obscure ones. Event time is 6:30 p.m. with the concert beginning at 7. Bring your chairs to Langtree on Thursday, June 27th for Beatles tribute band Tangerine Trees. Birkdale's Live Under the Oaks concert series continues on Friday. The ultimate 90s experience from Gump Fiction begins at 6 p.m. Kick back and relax on the green in front of the stage at Birkdale Village in Huntersville for the free Gump Fiction show on Friday night. Downtown Statesville welcomes live music this weekend. On Friday, Wine Maestro showcases a performance by Danny Wicker at 7 p.m., while Delaney's Sports Bar presents Bryce Reese at 8 p.m. Visit Downtown Statesville Friday night for live music at Wine Maestro and Delaney's Sports Bar. The Kane Center for the Arts, Week 4 of summer camps begins Monday, July 8th. Morning and afternoon camps for ages 5 to 15 include ceramics, drawing, art, food, painting, and more. The fall performance season begins Saturday, September 7th with a show by comedian Tom Cotter. For more information on the just announced fall performance schedule and summer camp programs, visit canearts.org. That's C-A-I-N arts.org. The Cookout Summer Shootout Series revs up summertime at Charlotte Motor Speedway. The 10-race series nights 5 and 6 are on Monday, July 1st and Tuesday, July 2nd. Visit charlottemotorspeedway.com for tickets, details, and information. To keep up with all the events happening around the community and much more, including amazing local deals, download the WSIC News app today.
10.
Making your money make sense. Dollars and Cents with CFP Joshua Dobi on 105.9 100.7 WSIC.
Hello, welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here. Second quarter football reference. Producer Bill, we're getting close to that time where we start to think about, especially because of the brutal heat that we've had here, we start to think about training camp. And I know these guys are super athletes. You've been around them even a lot more than I have. But man, I cannot imagine having training camp in weather.
Oh
like
no,
this.
not this week. Please, not this week.
No. That's right. And probably more than one of them. I'm just guessing, speculating maybe that they're saying, you know what, get this out of your system now, weather persons, and give us something that's a little bit more humane.
Please.
By the time.
Yeah, it is blue flame hot down here. Yeah.
Oh my goodness, blue flame hot. I like that. I'm definitely going to steal that. I'll give you the credit. for it as well. But let's keep talking sports here on Dollars and Cents, presented by North Main Financial. Tough to argue that there aren't financial economic impacts to all of our big time sports. I've had a number of news items here in the Queen City here recently. I know it was talked about on Good Morning LCAN, which, by the way, Monday to Friday, 7 to 9, Mamie, Justin, Bill, great program here on WSIC. Tune into that. If you don't have it on your radio, if it's not something that you're listening to the radio, get that WSIC app. You can get that on the Google Store. You can get that on the App Store for Apple as well. Great way. I travel a lot. Great way to be able to listen to that kind of stuff and hear all the recordings of the shows as well if you happen to miss one. So I know that we're talking about this. We're talking about the Charlotte Knights. And Charlotte Knights, if you're not familiar, baseball, AAA affiliate for the Chicago White Sox here in Charlotte. They were sold, and they were sold from a family, a gentleman, husband, wife combination out of Hickory that have held on to them. I want to say for at least 20 years, maybe even longer than that. That they held on to them. And actually, you know what? I think it's even longer than that. I want to say it was the late 90s when the Beaver family bought the Charlotte Knights, and actually that was even before they moved to Charlotte. That's when they were still in the northern end of South Carolina, there in Fort Mill, and they were part of that initiative to move them to Charlotte, and so we have them here in Charlotte, and they've been sold to a group called Diamond Baseball Holdings. And you say, well, I haven't heard of them, and probably not many people have. I certainly hadn't before they came online as the buyer here. But they own apparently upwards of 30 different organizations, including several other minor league teams, and so they've amassed a portfolio of these teams and parks and venues, and they are truly in the sports entertainment business. So pretty interesting, pretty notable news insofar as the Queen City is concerned with the Charlotte Knights, and we hope for good things as this ownership transition happens. All right, a little bit larger scale. And I'm going to be bringing you in on this, Producer Bill, because there's some controversy about this. And I know you guys talked about it on Good Morning LKN as well. But we got to talk about it here, if for no other reason than on the numbers involved. And anything that has to do with the NFL, you know it's going to be big numbers. I mean, there are no small numbers, whether you own the team or you're buying a ticket or, goodness, getting a Diet Coke in the stadium. It is a very, very big dollar enterprise. So just announced, Charlotte City Council for sure. Charlotte City Council approved a package, and I'm going to talk in big broad terms because there are a lot of details that are associated with these kinds of things, and I know they cause some emotional feedback, both positive and negative, when it comes to these kinds of things. I'm not going to delve too far into that, but really to talk about it, I mean, we're talking Charlotte City Council approving $650 million. You heard me say that correctly. $650 million in upgrades, improvements to Bank of America Stadium, where our Carolina Panthers play football. $650 million. It's huge, folks. I mean, whether you are for or against it, whether you like football, don't like football, it is a huge, huge figure. And again, there are sides on this kind of stuff. When I say sides, there are folks who say, well, Charlotte City Council shouldn't be involved at all. And there are other folks who say that this provides economic stimulus and is a catalyst for not only what the Panthers organization spends in our city and property taxes and all those good kinds of things, but also folks that come in from other cities, even from outside the country, also for the other events that are held at Bank of America Stadium, because there's a lot that happens there. They're really pushing that, not just football, but we got Charlotte FC that's in those spaces now with soccer games, and we've got also a number of other entertainment events that are there. So there are a lot of people who are coming to the stadium above and beyond football as well, and that's the other side of the argument. But Producer Bill, I'm going to put you on the spot here. Tell me your thoughts on this. I mean, this is big stuff for the city of Charlotte. It's true. It's big stuff for every city, no doubt about it. Everybody who has a big league sports team of any kind. But $650 million to the big Bank of America Stadium. What are your thoughts?
The football fan in me is all for this. You know, let's just let it happen. I don't know who is going to be assuming the risk for all of this and who's going to be paying for all of it. That is when, I guess grown conversations have to take place. But people don't have those around me too often.
Well, and folks again tend to get pretty emotional about it, and not everybody always has all the data. And that's you said it very elegantly there, and I tried to in a rustic way say that as well. That there are still a lot of details to be worked out, because one of the things that's true is that there are different ownership structures with stadiums, with the real estate, with regards to the real estate around the stadium in different cities. So when folks try to make comparisons, for example, Jacksonville, Florida, right now is doing something, let's call it quasi similar in terms of public-private partnership in revamping and updating their stadium. But if you take a look at the details, there actually are some significant differences. I'm not going to take up today's show talking about them because it can get pretty granular. But I think it's important that folks do understand that, like you said, about who's going to pay for what, who's responsible for what, not just up front or over the next couple of years, but sometimes, and this is true, I've seen with other deals with other municipalities, other cities, those kinds of commitments can last decades. And so that's very, very important, I think, for folks to know. It's not just the upfront figure or the upfront outlay, but how long does it last, and then how's it paid for? For example, the entertainment tax, which is a very popular way to finance these kinds of things. Charlotte looks like it's going to be utilizing that in an ongoing kind of way to help to finance this particular operation. It's going to be very interesting to see. And like I said, I'm not taking a side one way or the other. I'm with producer Bill. I am a football fan. I do like to see it because I think that we need to have that kind of investment. We have the stadium. We either got to invest in the current stadium, or we got to bulldoze it and either build another one or watch it go somewhere else. So I tend to land more in that camp so that you know what my biases are. But that just happens to be my biases, and I do enjoy it. And I'm glad and thankful that we have it here in Charlotte, because it looked for a while there like we were going to lose it to just over the line there to South Carolina. So I'm hoping this means that we'll be able to
stay
keep
put.
it around for a little
Stay
bit
put, please. Yeah.
Yeah, that's you know it. And now I hear a bunch of pessimists talking about, well, this is just a down payment, and eventually Tepper Sports is going to want a dome stadium. I don't know if that's going to happen or not. I don't know if that's the play. I'm just saying let's keep it here in North Carolina. Let's collect some tax revenue, and let's at some point let's get a competitive team on that field. All right. All right. Let's keep moving here. So we got sport. We talked a little bit of politics. We talked a little bit commercial real estate. We got sports. What's a good segue here? You betcha. Food. And there's always food news. There's always all kinds of stuff that's sitting out there in terms of the kinds of that companies are doing. It's a different environment. We talk a lot about restaurants here because a lot of restaurants are either individually or a part of groups which are publicly traded. So it's a very easy foray into companies whose information is relatively well known when you're a publicly traded company. So we do that here. I'm gonna start with one that's very, very popular here around the country, and that's Olive Garden, the Italian restaurant. What do they call it? Fast casual, is that where it slots in? You probably are at least familiar with Olive Garden if you're not one who frequents those kind of spaces. Olive Garden is owned by a group called Darden, Darden, ticker symbol David Roger Indian, publicly traded. Not a recommendation to buy, sell, or hold Darden. But Olive Garden is experiencing, and we're seeing this in a lot of restaurants across the board. Whether you're talking about the higher end ones, whether you're talking about the fast serve, quick serve, more casual ones, just the rising costs. And the rising cost for their inputs, meaning for what they need to buy on the raw food end of things to produce the finished product, those costs going up significantly, and the need for them to pass on at least a portion, and in some cases, they need to pass on all of those increased costs to the consumer, to the customer, in the forms of higher prices on the menu. Olive Garden just came out with their quarterly report. Excuse me, Darden Restaurants just came out with their quarterly report. And as part of that, Olive Garden saying that they have to do it. They don't have a choice. You're going to see price increases. If you're one who likes Olive Garden, you're going to see price increases there. And that's going to be something that you're going to want to keep on your radar screen. That being said, I can't think of any restaurant, at least nothing that I have read or consumed in terms of data, that is saying that we're actually going to be cutting prices. It's just not that kind of environment right now, folks. We're looking at the inflationary aspect of things with regards to prepared food overall, but certainly with regards to our restaurant spaces, that it's hard. It's very, very hard to do it. That being said, the chances are relatively good that I will continue to enjoy the soup, salad, and breadsticks at Olive Garden. Producer Bill, I don't know if you're one who takes that in, but that's certainly one of my favorites. For sure, it's good. It comes out quickly, right? Yeah, especially if you're in a rush, comes out quickly. You can get whatever kind of soup you want. They got like a half a dozen kinds of soup. So in addition to all the salad and breadsticks that you like, so it's a good quick lunch if you need to utilize it. Anyhow, but price is rising. You're going to be seeing that more really across the board. We have seen it. We're going to continue to see it with a number of our restaurant spaces, and the challenge comes especially with the smaller ones, especially with the mom and pop stores, how hard it is for them to be able to not increase prices yet still provide value in product. It really is hard. We talk with a lot of restaurant owners, especially here locally, who have that challenge. We're going to be watching it even closely. All right, folks, we're rapidly approaching the end of the first half here on Dollars and Cents, presented by North Main Financial. Hang with us as we hear from our sponsors here on WSIC.
We'll have more of Dollars and Cents with certified financial planner Joshua Dobi following these brief messages on 105.9 100.7 WSIC.
Well, yesterday, our hottest day of the year around the Lake Norman area. Thankfully, we'll cool it off a little bit today, back to typically hot for this time of the year. Mix of clouds and sun will warm it to the upper 80s, near 90 this afternoon. And nice
good job, about 3 minutes.
Thunderstorm isn't totally out of the question, but wouldn't hold my breath for that. Mainly dry, still upper 80s, near 90 tomorrow for our Friday. The heat and humidity soar back for the weekend with a few evening pop-up showers and thunderstorms Saturday and Sunday. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
Prioritizing your health is one of the best ways to take care of yourself. From routine visits to the joys of pregnancy to the illnesses that stop you in your tracks, Iredell Health System will be by your side. Learn more at iredellhealth.org.
If you're ready for a rewarding career, the team at Horn Heating and Air Conditioning is hiring. Great pay, great benefits, and a great team atmosphere. Experience the feeling of HornHVAC.com.
This is Fred Lowry at Lowry Drug. We now have our own brand of full-spectrum hemp extract, also known as CBD oil. I personally manage this product as it was grown on my farm here in Iredell County. It was then processed and bottled here in Statesville. This is a true herbal extract with all the medicinal components intact. A product you can trust to be authentic. And since there is no wholesaler, it's at a price you can afford. Try it at Lowry Drug on Hartness Road in Statesville.
Attention, fellow conservative investors. What does the name Reagan mean to you? It stands for being the ultimate conservative. It also stands for the Reagan Gold Group. Do you see storm clouds approaching? The stock market hates uncertainty, and there are plenty of reasons to be concerned. High inflation, unstable debt, and economic uncertainty are just a few. You have car insurance, homeowners insurance, and life insurance. But do you have insurance for your retirement savings and your 401k? We urge all fellow conservative investors to learn about the one asset that could help ensure your nest egg doesn't crack under economic pressure. G-O-L-D, gold. Call the one name any conservative investor needs to know about. Reagan Gold Group.
800-296-1557. 800-296-1557. 800-296-1557. That's 800-296.
This is a Bloomberg Money Minute. Tesla quality is now on par with some of its rivals, including General Motors. J.D. Power's initial quality study for this model year finds Tesla is no longer outpacing other EVs. The problem, the design changes it's made to its cars. It removed turn signal levers in some, changed window controls in others, and if you have certain Tesla models, the horn has moved. It's no longer in the center of the steering wheel. It's on the spoke. J.D. Power says those design changes are not being well received. Customers say they have to take their eyes off the road too long to find what's been automatic. Target is giving its workers more authority to stop shoplifters. Starting this summer, staff will be able to intervene to stop theft of items worth at least $50 instead of $100. Target has said inventory loss from theft, damage, and other factors has hurt its profit margins. On Wall Street, small moves. The Dow up 3, the Nasdaq 45, that's 0.25%. The S&P is just below the flat line.
10.
Joan Doniger, Bloomberg Radio.
Making your money make sense. Dollars and Cents with CFP Joshua Dobi on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents, presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here. Second half of today's show, giving attention to all things economic, financial, what's happening in the world around us here. And yeah, we had some anecdotal things that definitely do have financial impact, but hopefully put a little bit of a smile on your face as well. As we're taking a look at, again, those kinds of things, which may be a part of your experience, maybe a part of family experience, colleagues, etc. You know, got to provide this caveat for you as a previous listener that in talking about these kinds of things, we've talked about a couple of them already. We're going to talk about some more here in the second half. That nothing we're talking about here is intended as a specific recommendation for you. Reach out to your tax advisor, your financial advisor. You can ring us up at northmainfinancial.com as well. All right, let's keep going here on what's hot. We kind of got into the food theme there. We were talking about some of the struggles that Olive Garden is having with regards to pricing and needing to increase prices because of the fact that their input, their raw food costs are going up so significantly and needing to pass that through. It's true for a lot of folks. I mean, it's not just the Darden restaurant enterprises, but also the so many other restaurants, practically all, especially mom and pop operations, single location kinds of spaces, really feeling the brunt of that because they can't always buy on scale. And so really a lot of challenge there. We're going to be watching that very closely. Let's keep going on the food thing though. Starbucks, publicly traded, SBUX, Sam Bravo, Umbrella X-Ray. Not a recommendation to buy, sell, or hold. Starbucks, kind of interesting. They're coming back out with what I would call supercharged drinks. Now, don't. It's not like they plug it into an electrical outlet or anything. I'm not saying anything like that. But I would call these along the lines of energy drinks. I don't know that I have another way to describe them. The energy drink market up huge here in the last 5 years, upwards of 70% increase in terms of total sales of energy drinks. And that not just at places like Starbucks, but especially the canned drinks that you see in convenience stores, grocery stores. They are uber prevalent right now. And all the big players are in them. The Coca-Colas, the PepsiCos, the Seagrams of the world, all are Dr. Pepper, Snapple, all in play for these kinds of things. Panera was in them as well. Panera actually bumped into some difficulty in offering up drinks in their restaurants when they had two fairly high-profile lawsuits from folks who sued based on or because of family members who passed away, and the allegations being that they passed away because of the excessive amounts of caffeine and other stimulants inside of the drinks. So kind of interesting in light of that, Starbucks coming out with some supercharged drinks. And they got, now I got to, producer Bill, I got to ask you, even before I go on here, are you an energy drink kind of guy? And you don't have to limit it just to coffee related kinds of things, but are you one who likes these, the Red Bulls of the world, things like that?
Oh, especially back in the day, yes. Yeah. I'd like to think I'm more well tempered now, but I'm probably not. But definitely back in my earlier years.
And I think,
for no
think
reason
really
whatsoever. Yeah,
but they're trying to attract that audience, right?
Oh, yeah.
I think that's really where the focus point, certainly from the marketing that I've seen, that's really the focus point of these energy drinks towards a younger crowd and a younger demographic. I mean, even as insofar as these drinks from Starbucks are concerned, I have to think that they're focusing on the younger crowd. Here are the names here, and forgive me if you already know these, but Iced Energy comes in 3 flavors: Melon Burst Iced Energy, Tropical Citrus Iced Energy, and Frozen Tropical Citrus Iced Energy with strawberry puree. Now, I'm not saying that folks over the age of 40 wouldn't necessarily like those kinds of things, but I don't know. I mean, they're pretty savvy. I'd have to think.
Yeah, that's up the boss man here. That's up his alley.
Is that
Yeah.
right in line with? I'd say that doesn't surprise me at all. He's probably got one in each hand right
Right.
now to try them out. But very interesting. And in groups like Starbucks or Panera or Pepsi, Coca-Cola, they're always trying to stay current, stay relevant, and certainly, if possible, to have that next thing that is going to be attractive to that age demographic, which is brutal. Whether we're talking about fashion, whether we're talking about food, drink, entertainment, certainly from my end of things, with the publicly traded companies that I know that are in each of those segments that I just described, it is really, really hard. Not only to stay relevant and current, but then if you can, think about what the next thing may be that's going to be attractive, especially to that under 40 demographic segment. Really, really hard to do. And certainly, though, with these energy drinks, I mean, they've had some staying power here over the last number of years in various segments. Now it looks like Starbucks is going to be diving a little bit deeper into it. And so stodgy people like me will just keep ordering our straight black coffee and enjoy it. I'm on my end of things. All right, let's go. One more on the food segment end of things before we keep going here. You can probably tell I'm hungry. It's that time of the day. Chipotle. Chipotle, ticker symbol. It's a publicly traded company in and of itself. Charlie Mango Green, CMG, not a recommendation to buy, sell, or hold Chipotle. When we're looking at here, Chipotle, I would say, has been a very dynamic story, relatively new to the publicly traded space. It's been around for several years now. And when they came out of the gate, boy, were they were a darling of Wall Street. They really were. They had just some exponential growth in their stock price very, very quickly. I think caught even the market maybe a little bit by surprise in terms of how much appreciation in the stock price there was in such a short amount of time. They definitely tempered off. They had some issues with regards to quality in some of their stores. Even some of their stores had to close with regards to quality issues. Really went through a pretty rough patch there for about a year, maybe even two. And but now they have seemed to recalibrate. Certainly their stock price would indicate that. And their stock price has recalibrated so well that they announced and it has now come to fruition. If you happen to be a shareholder or if you're looking to buy those shares of CMG, again, not a recommendation to buy, sell, or hold them. But they have had a 50-1 stock split. Now that's pretty unusual. Sometimes you see 2 for 1 or 3 for 1. Even Nvidia had one here just recently, did a 10 for 1 kind of stock split. That's pretty unusual. To have a 50 for 1 stock split is quite unusual, where you get 50 shares for each share that you happen to own if you're a shareholder of record before the time of the actual split. Now, I should also tell you that before the split, shares were trading right around, and this is rough and round, figures right around $3,000 a share, which is also unusual. You don't see too many individual stock prices in the thousands. Usually they have 2 or 3 digits associated with them. They were in the $3,000 range, which was one of the reasons that they decided to split the stock so that it might be more accessible to more retail investors, which is a tactic, which is a strategy. And actually, if you look at data relative to stock performance post-split, there usually is a short-term blip in a positive way in terms of buying pressure on those shares. Sometimes it's a couple of days, sometimes even as long as a year. But there tends to be some buying pressure in a positive way for shares post-split, especially companies that are a little bit more popular, like Chipotle. Now, this is going to lead us right into the what to know segment here. Whenever I was looking at this, and I know that they talked about it on Good Morning LKN as well, that as I was looking at this and saying, you know what, I'm going to talk about this on what to know. In this segment with what to know, these are just, let's say, middle of the road kinds of things that are just healthy to know with regards to our financial universe. And we've talked about IRAs and we've talked about all kinds of stuff in this segment. But I'm going to talk about stock splits for just a moment here, because there's a common misconception that a stock split means you own more of that particular company. Folks, it's not true. It may be true that you have more shares, but those shares, as I just said with Chipotle, those shares have also come down in price proportionate to the amount of division there has been in the number of shares. So let me say it this way. Chipotle was trading at $3,000 a share. So if you had one share, worth $3,000. After the 50-1 stock split, you now have 50 shares, but each one of those shares is now worth, rough and round figures, about $60 each. So you still have the same $3,000. That part didn't change. Yes, you do have more shares, and then to get really granular with regards to your actual ownership of the company, which is, of course, what common stock shares are, nothing has changed at all. Zero, nada. You do not own more of the company because you have more shares. Those shares are now diluted or worth less because we have split, or the company has split them up, and each one of those shares trades at a smaller stock price. So actually, there is a net zero effect, literal, and it's meant to be that way. A net zero effect in terms of your actual ownership in the company by doing a stock split. I feel like I need to spend time on that because I had some conversation with NVIDIA here a couple of weeks ago, some other conversation this morning with regards to Chipotle.
I'm glad you did. I'm glad you did. I'm glad you explained it.
See, I mean, it's understandable that folks would think that way, right? I had
Sure.
one share and now I have 50 shares.
Right.
Right. That means I own more of the company, or I have 50 times as much ownership than I did before that. And insofar as the number of shares are concerned, yes. But insofar as your actual ownership in the company, and perhaps most importantly for your day-to-day activity, in terms of the number of dollars that you have invested in the company, nothing changed. It's exactly the same whether you have one share at 3,000 or 50 shares at $60 a piece. So it's important to know that. So I want folks to hear that. I know I'm drawing this out a little bit, but that's intentional because it's a very common misconception. And I understand why it's the case. But as much as I would like to say these companies are just handing out shares for free and saying, well, thanks for being a shareholder, here's some more ownership in the company. Folks, it just doesn't work that way. Well, folks, we're getting to the end of the third quarter here. Going to be coming back in the fourth quarter, talking more about the markets, what we see for the balance of the year. Hang with us here on Dollars and Cents, here on WSIC.
Dollars and Cents with your host, certified financial planner Joshua Dobi, continues straight ahead on 105.9, 100.7 WSIC.
Well, yesterday, our hottest day of the year around the Lake Norman area. Thankfully, we'll cool it off a little bit today, back to typically
about 2.5 minutes
for this time of the year. Mix of clouds and sun will warm it to the upper 80s, near 90 this afternoon, and an isolated shower or pop-up thunderstorm isn't totally out of the question, but wouldn't hold my breath for that. Mainly dry, still upper 80s, near 90 tomorrow for our Friday. The heat and humidity soar back for the weekend with a few evening pop-up showers and thunderstorms Saturday and Sunday. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
Here is your WSIC community calendar. Langtree Live gets your weekend off to an early start on Thursday night. The Carolinas' premier Beatles tribute band Tangerine Trees covers many well-known songs and a few obscure ones. Event time is 6:30 p.m. with the concert beginning at 7. Bring your chairs to Langtree on Thursday, June 27th for Beatles tribute band Tangerine Trees. Birkdale's Live Under the Oaks concert series continues on Friday. The ultimate 90s experience from Gump Fiction begins at 6 p.m. Kick back and relax on the green in front of the stage at Birkdale Village in Huntersville for the free Gump Fiction show on Friday night. Downtown Statesville welcomes live music this weekend. On Friday, Wine Maestro showcases a performance by Danny Wicker at 7 p.m., while Delaney's Sports Bar presents Bryce Reese at 8 p.m. Visit downtown Statesville Friday night for live music at Wine Maestro and Delaney's Sports Bar. The Kane Center for the Arts Week 4 of summer camps begins Monday, July 8th. Morning and afternoon camps for ages 5 to 15 include ceramics, drawing, art, food, painting, and more. The fall performance season begins Saturday, September 7th with a show by comedian Tom Cotter. For more information on the just announced fall performance schedule and summer camp programs, visit canearts.org. That's CAIN arts.org. The Cookout Summer Shootout Series revs up summertime at Charlotte Motor Speedway. The 10 race series nights 5 and 6 are on Monday, July 1st and Tuesday, July 2nd. Visit charlottemotorspeedway.com for tickets, details, and information. To keep up with all the events happening around the community and much more, including amazing local deals, download the WSIC News app today.
Call now to speak with certified financial planner Joshua Dobi at 844-STUDIO-4. It's Dollars and Cents on 105.9, 100.7 WSIC.
Hello and welcome back to Dollars and Cents, presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much. Hanging with us here, fourth quarter football reference. You got 11 minutes and 53 seconds until you hit the finish line here, and I appreciate so much you hanging with us. To spend that time with us, we're talking about things economic and financial. And just before we went to break there, just want to highlight very quickly again in our What to Know segment, those kinds of things financially may be helpful for you to keep in mind, had to do with stock splits. And specifically when you own an individual stock, sometimes it happens with funds as well, very rarely, but sometimes it happens with funds as well. Most often happens with individual stocks. When you have a stock split, yes, you own more shares in more, let me say, in more traditional splits, because there are reverse splits as well. Not talking about that in today's segment. But in traditional split scenarios, yes, you have more shares, but you actually don't own more of the company because those individual shares are now worth less or trading less. So very, very important to keep that kind of thing in mind when it comes to stock splits. All right, we got to talk about another one here that doesn't have anything to do with stock splits. Boy, I feel like I've been talking negative today. I really didn't intend for that to happen. But I got to talk about this one because this particular one, as it came across my radar screen, it impacts so many of us. And when I say that, I'm talking about drugstores. For so many of us, if you have a prescription, you're getting it from your local drugstore or from a chain drugstore, perhaps from your grocery store, from local pharmacy. I mean, so many. I mean, we're talking about literally tens to hundreds of millions of folks at some level have need for a drugstore, and either on a regular basis or on a periodic basis. But they are ubiquitous. They are everywhere, right? I mean, we see them. It's tough to go through a lot of communities without seeing a drugstore of some kind in some level of proximity. So I got to talk about Walgreens. Walgreens, publicly traded, Walter Bravo Alpha, WBA is the ticker symbol, not a recommendation to buy, sell, or hold Walgreens. Came out with some pretty discouraging news. And boy, if you don't believe me, just take a look at the performance on the stock price today. Down about, well, actually a little over 20% in one day in terms of stock price. Rough go at it. And I say that on top of the fact that unfortunately the stock price is down over 50% this year, just in 2024. So this is not something that just happened today. It's been on a negative trend. And actually the price today, I didn't see it right before we went online, but it probably closed right around a low point that was last hit in the late 1990s. I mean, I think it was 1996, 1997, since Walgreens has been at this low of a stock price. Pretty challenging. And they may close. I mean, it comes down to making money. I mean, and I know we don't like to talk about that sometimes with regards to things healthcare related or pharmaceutical related, but there is a fiscal reality to these stores. And in short, about 25%, roughly 1 out of 4 stores for Walgreens. By the way, they have about 8,600 stores around the country. So we're talking about they got stores everywhere. It's kind of like CVS, Rite Aid, although they're out of business now, they're bankrupt. I mean, you see them in a lot of areas. 8,600 stores for Walgreens. About 25% of them, about 1 out of 4, lose money. I'll say that again. About 1 out of 4 of their stores loses money. Now, you don't have to be much of a statistics or a mathematician person to know that's not a good space to be. Meaning your other 3/4 of your stores better be making a tremendous amount of money to cover up for the fact that the other 25% are losing money. And frankly, Walgreens hasn't been able to do that. That's been reflected in the stock price. And they came out today to say there is a plan now to likely close upwards of hundreds of Walgreens stores here over the next couple of years. That's really the reason that I'm bringing this to you here. Yes, it's a publicly traded company, but really because drugstores are so much a part of our communities and there are so many folks who need them in various ways. If you are one who uses Walgreens stores, I'm not saying stop using them. I'm just saying pay attention because this is very public. This is not something that I found out on the inside loop or anything like that. This is very public kind of thing. It reminds me, not saying that Walgreens is going bankrupt because at this point they're not. And I'm not saying that they will either. But it reminds me a little bit of the conversations we were having about Rite Aid here a couple of years ago and the struggles they were going through and the number of stores that they had, which were not making money. And they ultimately had to declare bankruptcy for Rite Aid. Now, those stores were taken over by Walgreens, by CVS, by other entities as well. They closed a bunch of them also. But it's been a similar kind of scenario. And just taking a couple steps back from it, it's really speaking to our whole pharmaceutical industry and healthcare overall, and how challenging it is for a number of entities to continue to have a profitable model to continue to operate. It really is. I mean, there are a lot of hands in the healthcare industry, and it's really, really hard for entities to continue to do well in that space. Even though when you're looking at, in terms of the number of people who actually darken the doors at CVS and Walgreens, I mean, hundreds of millions of visits. I mean, so it's not for a lack of let's call it walk by intensity for their need for what they provide, but rather their ability to have a profitable margin associated with the entity overall. So it's going to be very interesting to see how Walgreens continues to progress. Is this, really just a reorganization aspect of things? If they're going to close a bunch of their stores which aren't profitable, and then concentrate more on the profitable ones. Perhaps most importantly for you, if you're in a community that perhaps only has a Walgreens drugstore, if that's one of the ones that closes, it's a big deal. That's why I'm bringing it up. So again, not a recommendation to buy, sell, or hold WBA stock, but rather to be aware of it, especially in our communities. What does that mean? Which ones are going to close? None of that is public yet. We have no idea here, but certainly something that we're going to continue to watch on our end of things because it impacts so many folks, not only in our community but around the country. All right, let's talk markets. I know I always drag it out until the bloody end. I do that on purpose. I like to keep you around and hopefully give you some nuggets about some things that are happening in our financial and economic universe. Let's talk markets, though. Not a whole lot changing here over the last couple of weeks. Frankly, the kinds of things that I watch from a volatility standpoint, meaning that there are various measures, various metrics that we use to measure volatility in the market. And without getting too granular and probably causing you to yawn, really that means when we're talking about volatility, the speed and the depth in a positive and negative direction that markets move. That's really what we're talking about with volatility. We're looking at volatility is quite low right now. It's almost like 30 years ago when I started out in this business. It's almost like when folks used to really not do a whole lot through the summertime when it came to our financial markets. I know that's not the case anymore, but it's kind of interesting to watch that the things have been, let's call it, pretty quiet here over the last couple of weeks. And plus, we have a holiday this coming week, this week ahead of us here. Probably going to be light volume, probably going to be relatively calm as far as market volatility is concerned. Unless we get some kind of geopolitical event that turns things on their heads a little bit. But at least at this point, relatively calm. I mean, here we are next week. We are literally going to be at the halfway mark here on our calendars. Big deal, folks. And it's been positive. Actually, if you look at our most popular indices, all of them, the Dow, the NASDAQ, the S&P 500, those are the three most popular that are out there in terms of the number of folks who utilize them. That's why I'm saying that. That they are all positive. Now the Dow, not so much. Dow is pretty modest in terms of its gains year to date. But boy, if you look at the S&P 500 and the NASDAQ, very positive year to date. Primarily driven, I'm going to call it almost exclusively driven by our large technology companies. So yes, I'm looking at you, NVIDIA. I'm looking at you, Meta. I'm looking at you, Alphabet / Google. I'm looking at you, Netflix. I'm looking at you, Amazon. Apple, not so much. Apple's been relatively calm and tame compared to all these other monsters that I talked about in terms of overall performance. But it is big technology, which continues to lead the way. Very interesting. It's very rare. And let me say it from this standpoint. So this is my more commentary now. Very rare that we have instances of a year like 2023 where big tech definitely led the way, to now a space where the first half of 2024 has been essentially the same thing. Meaning that usually it runs a calendar year. I don't know why it does that. It really does that, though, in so many instances. And we have it, again, where the first 6 months of this year has essentially mirrored what we've done in 2023. And actually, if you X out 2022, it was the same thing that happened in 2021. Very interesting. Big tech leading the way. If you look at the 3 and 4 year return averages of some of our large technology companies, it's outrageous. I mean, especially in my world where I plan for 5 to 7% average returns over a long period of time, even though the markets do better than that, I plan conservatively. Boy, way above that, 10x, sometimes 100x over that, depending upon which ones you're tracking during that time. Pretty unbelievable. So what does that mean? All right, here comes the damper. Here comes the gray clouds. I feel like that. There's that movie, producer Bill. You're gonna get real familiar with these movies here soon. That movie that's out there right now, the second version of it. Forgive me, I don't remember the name of it. But where all these cartoon characters are various emotions. I forget. Do you know what I'm talking about?
I do know. Inside Out. Inside Out.
Inside Out. Yes. So the second version came out here, and I feel like that I'm the sad one. You know, the blue character.
Yeah. Hey, you're just laying it how it is. You're just telling it how it is. Yeah. Nothing wrong with that.
I like to look at the glass half full, though. You know, I mean, I like to look at it half full. So I'm going to come out with a word of caution here. Just be careful. And be careful, not because there isn't always risk associated with investing in our markets and our financial markets, but because, especially if you're looking at the hot issues. And I had this conversation this morning. I was saying the same thing to a client a year ago, and he reminded me of that it was good to be cautious. He said, well, I should have ignored you and just gone all in. And I said, I grudgingly had to say through my gritted teeth, you're right about that. But it's true. And so I have been early in saying be cautious here, but being cautious always applies, especially if you happen to own some of these high flyers as well. Take some of that cream off the top. It's not true for everybody. That's not a recommendation to buy, sell, or hold anything, but just be careful and be cautious. It's a very big deal. Well, friends, we're rapidly wrapping up this week's version of Dollars and Cents presented by North Main Financial. Again, looking at markets overall with where things are, just be cautious of the high flyers. Take a look at things broader than that. Are there other things we need to keep in mind? We're going to be watching it here as we get into the second half of this calendar year. Thank you so much for hanging with us here on Dollars and Cents. Looking forward to seeing you next week on Thursday.
Serving you better than ever before. WSIC, Statesville, W290DK Mooresville, W2